Is inflation taking back off? Last week we got the PPI numbers and they came in hot. I'm a little bit late reporting to this news, but we saw such a big jump in the PPI that we've got to talk about it. We saw the Bitcoin price tank, and we also just have to think about what this means for upcoming Fed meetings, right? Does this change what we're going to see at the September Fed meeting or at some of these meetings throughout the rest of the year, and what it means for the state of the economy as a whole? Before we do get into it, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. So we saw a huge increase in the PPI inflation for July. We saw a 0.9% month over month increase, and we saw a 3.3% year over year increase. This is a huge jump than we've seen in previous months for the PPI. If you're not familiar with the PPI, it stands for the Producer Price Index, and what it does is it measures the inflation that we're seeing in producer prices. Now, I really don't like these measurements, the PPI and the CPI, because when I think of inflation, I think of the money supply growth. I think that the government uses these metrics to manipulate what inflation really is, right? They get to choose this basket of goods that these producers are producing or that these consumers are buying, and they can kind of manipulate what we think the actual inflation rate is. But we really want to just follow the money supply, right? Inflation is the growth in the money supply, and we are starting to see that take back off. Maybe I'll put a little visual here of the M2 money supply, which we are starting to see slope upwards after contracting over a couple of years following that COVID spending. And maybe the reason that we're seeing these producer prices go up is because of these tariffs that we've seen implemented. Now, a lot of these tariffs are kind of still being worked out, and we're seeing the US work with other countries to come to agreements. But we know that we have that baseline tariff for most countries. And although this, PPI is measuring the producer prices here in the US, these producers here in the US have to import raw materials and inputs from other parts of the world to produce, and that may be leading to higher prices. Another reason that the PPI is rising is that inflation is sticky, and we did see a ton of monetary expansion with all that COVID spending back in 2020 and 2021. And although we did see this period of monetary contraction, right, where the government was lowering the broad money supply, now we're starting to see the broad money supply kick back up as the Fed has lowered rates a little bit towards the end of last year, and we have some QE starting to happen. And I think that we are going to see some more quantitative easing, and we are going to see inflation continue to head higher. The government will try to find ways to hide it, but really the only way for this fiat game to continue is for the money supply to continue to expand. If the money supply doesn't continue to expand, we're going to see a credit collapse. Now, let's get into Bitcoin, because this is a Bitcoin YouTube channel. I know that's why you're here, so let's talk about it. After we got the PPI numbers, we saw Bitcoin fall from around 124K down to 118K, which was a pretty significant drop, and we actually just hit an all-time high around 124K. So it was a little bit disappointing to wake up the next day and see Bitcoin a lot lower. But I don't know if this was really due to this PPI number. Obviously, with a higher PPI number, it's going to mean a lower probability of rate cuts, right? If inflation is high, the Fed is going to be more hesitant to loosen their monetary policy. But we also got some news that Scott Bessent, the US Treasury Secretary, basically said that the US is not going to be buying Bitcoin on the same day that we got these numbers, and I think that also contributed to this price decline. Now, he also put out a tweet or a post later that day saying that the US is actually exploring ways to add more Bitcoin to the Bitcoin strategic reserve. So we've really seen this current administration under Trump really like to play with the markets and like say one thing and then the market reacts and then they retract that statement or change it later, which I don't know what the legality of that is, but we've seen a lot of market manipulation from this administration. And who knows, maybe there were just some other things going on here, right? With Bitcoin making a new all-time high, maybe people were trading out of that position for some reason. But now we're seeing Bitcoin around 116K, 117K here. And I just think it makes for a great buying opportunity. We did break an all-time high, so that's a good sign, right? It means that we're still in this price discovery mode. So I think right here is a good opportunity to buy. Now, one thing that was interesting is that although we got these high numbers for the PPI, we didn't see the odds of a rate cut come down that much. We saw the odds for a September rate cut of 25 basis points drop from 80% to 66% following the PPI numbers, and now it's currently at 71% odds on Polymarket. So I think that the Fed has seen these, for one, they've seen all this political pressure from the Trump administration who really wants them to cut rates, and a lot of other people want them to cut rates as well. But we also got these bad jobs numbers. We can see that the banks still have a lot of unrealized losses on their balance sheet. And I think that for the Fed, it would be better to see a little bit of inflation than to keep things too tight and start to see things fall apart, right? Start to see more economic weakening, more bankruptcies, more layoffs. Then you potentially get into a situation where people are defaulting on their loans, maybe the banks get into trouble, and that's just going to lead to more problems for the government. So we are really starting to see the markets price in a couple of rate cuts coming up soon here. I also saw on Polymarket that the probabilities for 2 cuts in the remainder of this year for 50 basis points is at 39% odds. So it looks like we will get some rate cuts here. The main reason that I think the Fed may be hesitant to cut rates here is because if they do cut rates and we do see inflation take back off more aggressively and we see assets like Bitcoin, gold, stocks heading higher, what is that going to mean for the US Treasuries market, right? It's going to mean people are going to leave the US Treasuries market and go into these assets. And that's a huge problem for the US government because we are seeing the debt continue to grow. We have seen weak demand for US treasuries, really US Treasury bonds, and they really need to be pushing more people into this market. If other assets are taking off, people are going to be leaving that market. To kind of recap here, I am not surprised that the PPI has continued to head higher, and I really think that inflation is going to continue to go up. But I think the thing that we should really be looking at is the M2 money supply, right? By looking at these PPI and CPI metrics, we're getting tricked, right? We're told that that's what inflation is. No, inflation is the growth in the money supply. So I really think that we should be paying attention more to that. And really the money supply has to keep growing because of this debt-based system, this credit-based system that we live in. If the Fed doesn't cut rates, if the government doesn't do QE, if the Fed raises rates, it's going to lead to a credit collapse, and that can't happen. So who knows? Maybe we could see the government and the Fed keep policy tight, right? And try to not let inflation get out of control, but they're really playing a dangerous game there. I think that it's probably more likely that we do see more QE coming up here, which is where the government basically buys their own treasury bonds in order to support the market. And they do that by creating new money and pushing that out into the market, taking the treasury bonds and putting them on their balance sheet. And I also think that we will probably see, I think that we will see some rate cuts. I don't think they're going to be able to lower the federal funds rate too much because I think it's going to lead to problems for the treasuries market. So we will see what happens there. I think that what we are ultimately going to see is the money supply keep increasing, and that's just another reason to get into a hard asset like Bitcoin. Really, inflation is just another word for currency failure, right? If we're seeing inflation with the money, if the supply is growing, to me, that signifies a fundamental problem with the money. We want to see a fixed money, or a money with a supply that is growing very slightly. And we really have a fixed money in Bitcoin. So I think it's a great time to get in. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.